we are talking about not just finance, but really the problems and challenges that we may well get trying to grow a business. And part of those challenges will be finance. So hopefully by the end of the day, you'll have an idea of what sort of strategies you need to set um, when you're sort of growing your business. Um, Introductions. Does everyone here know Tony? Tony, do you want to do a quick intro?
Yeah, I can do. So, hi, I'm Tony. I am, moving the slides on before I need to. Yeah, I'm the founder with Ian of Expert Growth Services. I've been a business coach, mentor, trainer, facilitator, whatever you like to call me, for the last 30 plus years, working specifically with small and medium sized enterprise, helping them to grow, scale, free up their time and get the life that they really want, which is the reason they set up their business in the first place usually. Had a little brief stint in corporate. They fell out with me, I fell out with them, and then went back to my love, which was working with small businesses. That's me.
Okay, thank you. Right, just very briefly on me, ex-banker, left bank in 2010, set up my own business, which is commercial finance brokerage. And really this subject today is really close to my heart because we grew rapidly in 4 years to close to £4 million turnover. So I know what the challenges are. But also, if you look at what I've done over the years, I haven't counted them all, but I was lying in bed the other night trying to think how many I've actually done. And I've probably done close to 10,000 desktop audits on businesses, looking at their financials, whether as a banker, auditor, or broker. And I've visited hundreds of businesses. So hopefully what I'm going to tell you today doesn't just come from the heart, but it also comes from having experienced it and been there. So what I would like as well, please feel free as much participation as possible, because I think finance is something that's very close to our hearts, and money, whether it's in our personal life or business, is always an issue or a challenge, put it that way. So just feel free just to ask me any questions. Okay. So what the objectives of today really is saying there just to help us navigate through the financial challenges of growing a business. And we're going to be looking at things like what is profitability, what's cash flow, what sort of tools do we really need to be able to monitor that growth, and to sort of look, we'll have a plan, a 2, 3, 4, 5 year plan, and how we're going to get there, and also the day-to-day challenges of actually any financial problems we might have. Okay. So yeah, we can.
This.
Sorry?
We already said this, drop your details in the chat.
Yeah.
So I see Stu and Zena, you put yours in there.
Okay, so why are we looking at finance being the key to growth? Now, it's all about financial discipline. It's all about understanding where you are with your cash flow on a daily or weekly basis. We're going to be also looking about any strategic funding you might feel you need. And with all these, it's all about, and we'll be talking about financial roadmaps. It's really all about planning, and as I said earlier, about where we're really looking to be, and have we got the resources in place financially to be able to cope with what we want to achieve. And we're always going to have there's always going to be common challenges with all this when we're running a business. We are going to have cash flow shortages. It doesn't matter how great a business it might be. There are always going to be issues with your cash flows. So we'll also be looking at how we can deal with those issues. Unplanned expenses. Yeah, things do occur. So it's a matter of just perhaps allowing for any what I would call contingencies that might happen. Even if you don't know what they are, just try and put something in any budgets you might set yourself. Um, and then obviously looking at funding, we'll be sort of thinking to ourselves, if we're growing this business, have we got the funding? Where's it going to come from? Is it going to come from our own pockets, or are we going to have to look outside? So, okay, next slide. Okay, right. So setting growth orientated financial goals. Now, I mean, really what we're going to be doing here is looking at what's achievable. And I think also being very realistic. Uh, you know your business, you know really your target market, your audience, how far you think you can go in and achieve any increase in turnover. So I think the first thing you always have to do is what we're going to call is a financial roadmap, is really planning what we're going to achieve over those next 2 or 3 years. It might be just be the next year, but so it's looking at your revenue targets. It's looking at your profit margins, whether you're a service industry or you're manufacturing or whatever. You're always going to have margins or costs to achieve that turnover. So just make sure that you're aligning those financial plans with your business strategy. And I think what's very important is it's 2 words really. Don't be too bullish, be realistic, but be conservative. Just really think about what can I really achieve. Um, so, and with those business growth goals, once again, it's how far you want to look into the future, how far you really think that you can achieve what you want to achieve. And as I said earlier, if you just feel that you want to do a growth goal over 1 year, fine, 3 years or 5 years. I mean, personally, I would say that a 3 year goal would seem the sort of the right target to be working to. So it's really matter then when it comes down to sort of looking at this strategy and look at these goals. It's how you're going to build the processes to get there, and how can you achieve that efficiently. And then look at your cost structures and your pricing and your pricing modules. So are you going to need more staff? Are you going to need additional premises? It's all a matter really of thinking ahead. Okay. Any questions? Just please stop me. Is all this making sense at the moment? Yeah.
Yeah, anyone got any specific issues that you might like us to cover off and deal with at the end as well?
Okay. So when we're looking at I can't quite see that screen properly. Hang on, let's just move my thing up there. That's better. So really what we're doing here, pros and cons of self-funding. So when we're looking at a business, there's various routes we can take. We can obviously look at debt. Now, where's debt going to come from? Where are we going to get debt? Well, we can go to the high street banks. We can go to what I would call the alternative lenders. If you've heard of people like Funding Circle or IWOCA or Fleximize, they are lenders who sort of came into the business probably 10 years ago, and they were basically hitting the SME market on unsecured business loans. Interest rates aren't particularly great. You're looking for anything really from 10 to sort of 30%, but they do have the products which do suit SMEs. Or you can go what we call equity financing. Now, with equity financing, basically that is going to an individual and saying, okay, Mr. Smith, do you want to invest into my business? Now, that's fine, but the problems you've got with that is, one, you're going to have to give up shares. Two, you are obviously going to be reporting to a third party who could well be questioning you. That can sometimes be uncomfortable for you. So if it's needed, yes, it's needed. I mean, when we were when I set up my business back in 2013, I mean, the growth that we had was just wasn't expected, and we then decided, or I then decided that I felt I needed something like about £2 million of funding because my goal then became to be one of the top 3 brokers in the UK. And then we went out for equity funding for £2 million, and it was I suddenly realised that people wanted, I was hoping to probably get away with sort of 15-20% shareholding, but everyone was looking for sort of 40-45%. It was like being in Dragon's Den. And it was just, we decided in the end not to go that route because I just basically wanted to keep full control of the business as a 100% shareholder. But there are people out there. All I will say about with this, when you're growing a business, if you are going to go for an investor, don't just take their money. I think you've always got to be very conscious of the fact that can you work with this person? Okay, because they will be close. There's no reason why they shouldn't be close to you. They're going to want to know your figures. So I think it's very important that you feel personalities that you can work with this person and they can bring something to your business as well, not just the money. You know, have they the experience in your sector? So there's got to be value there. But then we've got some alternative financing options. I mean, you can go crowdfunding. There are obviously grants available, and there's sort of other products like invoice financing, etc. So, okay, next slide. Okay, cash flow. Now, cash flow, effective cash flow is very important. And I think what we have to realize is that cash is not profit. And with any business, you need cash. Now, a business can survive by making a loss. Doesn't really make sense, but it can, because all you can do is just prop up that loss by putting in your own funds or borrowing money. What you can't do is a business is not going to survive if you haven't got cash. Simple as. So you need cash. You need cash to support your operations. You need cash to expand. So you then really got to start looking when it comes down to cash flow management, and when you start looking at your financial roadmap. And okay, you've got a business, say, turning over, let's say, £200,000, and you want to get to 500,000 at the end of year 2. So you've got to be looking, and we'll talk about this later on, about doing some projections where it's not just about profit. Yeah, okay, if I can get the 500,000, I'm going to make 80 grand profit. Fantastic. But that is not cash. So it's a matter of knowing how much cash you are going to need to bring into that business to be able to support that level of turnover. And by supporting that level of turnover, you're obviously going to have increased costs. So it's when you look at this growth side, it's look at your fixed costs, look at your rent, so or wherever you're working from. Do I need more staff? Will my existing premises be sufficient for the way I want to grow? And it's no good leaving it to the last minute. If you are confident that you can grow and you are growing, you need to be thinking of these things sort of 3 to 6 months ahead. Look at your variable costs. What costs do you actually need to achieve your turnover? Now, I mean, I assume you know the difference between fixed and variable costs. Your fixed costs are there, come what may. Your rent, your telephones. Your variable costs are costs really which are linked to your turnover. So it might well be that you've got sales staff. It might be that you've got 2 sales staff running a business or assisting you on a turnover 200,000. Are you going to need 3 or 4 sales staff to get to 500,000 turnover? So just think about those variable costs when you're sort of looking at your growth. So the techniques there to improve your cash flow is forecast regularly. Now, I always say to people, okay, we're January the 1st now, so you do a cash flow forecast for the next 12 months. I guarantee you by January the 20th, that cash flow's out of sync. But what it's doing by doing it for 12 months is at least it is giving you some kind of working document. You know, if I am going to go from 200 to 400,000 turnover in year one, what's it going to look like? How much cash is that going to generate? But things change. And if you are growing, you are going to need more. You are generating cash, but you are going to need cash to be able to support your business. So it's very important that you monitor your cash flow. I mean, I was monitoring my cash flow on a weekly basis. And that was on a business turning over sort of 3 million. We were still looking at what costs we had coming in that following week, what the expected income was. So we're always looking at a worst cost scenario. Obviously, another technique is to improve your invoicing. So if you're getting 30 days terms, are you happy with that? Can you extend that? Or if you're offering your creditors 30 days, can you get that increase? So it's a matter of just playing with your cash flow and seeing just to ensure that you're keeping positive. So as I said, as it says there, so optimize any payment terms with your suppliers. If you can get increased terms, fantastic. I always say that your trade creditors can be your bank. If you're getting 30 days credit with your creditors, if you can get it to 60 days, fantastic. They're not charging you interest. So just optimize the best you can with that, with your payment terms. Okay, next slide. Managing expenses, right? Okay, so this really, what we're doing here is it's about coming back to really looking at your operational costs and really thinking to yourself, can I cope with this? And really, I think the biggest mistake people may make when they're looking to grow is they don't, and I've seen this time and time again, it's a matter really of looking at those costs and seeing how they're going to grow. And what I tend to do is if I'm looking at a set of projections and I want to grow a business, I will be fairly conservative on my turnover. So let's say, for example, my costs are 50% of my turnover. Now, if I'm doing a projection to grow my business, although my business might grow 200%, I might decide that my costs are going to be 65, 70% of my turnover. So I'm looking at a worst case scenario with my cost, because what will happen is, although your turnover is rising at a rate of whatever, you'll always find initially that your costs will rise quicker until you get to a stage where your profit is really subsidizing that gap between your cash requirement and your turnover. Does that make sense? Yeah. Initially, we have to pay out that cash before we can make a profit. So it's really just bear that in mind. And also with growing, look at your price strategy. I mean, have you got your price right? I mean, we're all very wary. How do we price things for the service or the product we sell? Are we too expensive? Are we too cheap? And yet, what can we get away with? What are our competitors offering at what price? But you've really got to base your pricing on your business and your costs. Yeah, take as I say, look at your competition, but you've got your own costs to meet. So it's just making sure that you've got that right. I mean, with our business, and it's very interesting actually of sort of testing the market. We we were brokering loans for clients. So you'd be a business, you'd come to us and say, I want to borrow 50,000. So we'd go to the market, we had a panel of lenders, and we would hopefully find that client the deal. And we would get paid a commission from the lender. Now, we at the time, we were growing at quite a rate, and there was a competitor, well, we had two or three competitors in London. And I thought to myself, it's funny actually, one day I took out some home insurance and they charged me an admin fee. So I thought it's only about £25. And I thought, that's interesting. So I thought to myself, right, okay, we're getting paid by the lender. So, and bearing in mind that we were growing at a hell of a rate and the costs were going through the roof. So I did need additional income. So then I came up with the idea of charging the client an admin fee for the work we were doing. Now, none of our competitors in the commercial finance brokerage market were doing that. So that was one hell of a decision. So I sat down with my co-director and we said, right, okay, where do we pitch this? And we pitched it at £99. Now, the thing is, we were already growing. What was this going to do to the business? It could have, I won't say destroyed the business, but we could have lost a lot of deals that we would have had before. And to be honest with you, it made no difference whatsoever. We found out the clients were more than happy to pay it. And within 3 years, that £99 actually went to 3 to 4% of the loan they were requiring. So you had someone looking for 100 grand, they were paying a £3 grand admin fee. So sometimes it just shows you it's understanding your client and what they are prepared to pay for your service, irrespective of what we were getting from the lender. So yeah, just look at your pricing strategy and just bear that in mind. You know, what can the market and what can your clients afford, and the value for money that you are giving to your clients.
Can I jump in here, Ian, as well?
You can. I need a break.
Yeah, have a Kit Kat. I think this is one of the biggest issues that, you know, the businesses that we work with face, is this issue around pricing and the sensitivity. And most of the sensitivity comes from us. You know, we're worried about whether we're charging the right money, are we worth it, all of those things. Will anyone buy from us? And the key thing is really to focus on, one, what you need, and Ian's so right, it's like, what does your business need? What do you need? And more importantly, what do you want to gain out of your business? And then secondly, making sure that you've really cracked your ideal client work so that you are actually going into the market, aiming at the clients that can afford what it is that you've got to offer, that will bear that admin fee, or that can bear you know, you being able to sell more to them than just one thing, that are going to be repeat customers that maybe will go on a recurring revenue. You know, like it doesn't have to be just about reducing your costs and rising your prices, but you do need to think about, are you charging what you're worth and what you're, you know, aiming what you're worth at the client that can afford to pay for it. So you might need to do some work on the ideal client. Now, I usually have the antithesis around competitors, you know, because any business school will tell you, go and do a competitor analysis. But for me, I feel that's just total waste of time, because none of your competitors are you. None of them offer the way you do. None of them have the experience or expertise that you do, and none of them are you. None of them have the same structure and overheads that you do. So it actually means nothing. The key work is around who is your ideal client, and then charging what you need to charge, or what you want to charge to earn what you need to do to get the growth that you need for you and your life and your business. And then I'll get off my soapbox. So shall I move on? Any questions, please, jump them in the chat.
Okay, yeah, next, that is the next slide, isn't it?
Yeah.
Right, okay. Just sort of thinking about all this, you might be thinking, well, what we've been talking about so far is really related to sort of your larger or medium-sized SMEs. It's not. Slight exaggeration, really, but this can relate to your sole trader window cleaner. It can relate to a £10 million turnover business. It's the same template. It's the same roadmap. A window cleaner needs to have. He'll have a mental financial roadmap on the back of a fag packet, but he knows what he's got to achieve. He knows how many houses he's got to clean to survive. So this isn't just about, the businesses with 10, 15, 60, 100 staff turning over 10, 15 million or whatever. So just bear that in mind. So really what we're moving on to now here is just financial metrics and how we're going to track our performance. And there's an old saying that I always use. Tony's probably heard it hundreds of times, and I do bore people to death to it, but it's so true. And it's called turnover is vanity, profit sanity. Now, what is growth? Would you rather have a £10 million turnover company making 100 grand or a £3 million company making 300 grand? So growth isn't just about, oh, my turnover is going through the roof. Fantastic. No, it's all about profitability. There's two things when running a business. Number one, making sure we've got enough cash to survive. But number two, at the end of the day, you want to walk away with your financial year end of showing that you've made a profit. Doesn't matter what your turnover is. Okay, obviously, if you've got your cost structure right that we talked about earlier, get your cost structure right, your margins are correct, your pricing correct, and yes, that increased turnover will give you a better operating profit margin. So, I mean, the key financials really, what I always look at are your gross margin, which is basically your turnover against your variable costs, and then obviously your net profit margin, which is your overall end profit against turnover. And that is very difficult, but with any business, really, you should be achieving, well, one, you should be making a profit, but two, you should be achieving a net profit margin around about 10, minimum 10 to 25% on turnover. 25% would be very nice indeed, but most businesses average 15 to 20%. Your cash conversion cycle, working capital, once again, that all revolves around, and this isn't really a metric that you can check, but it's really something that I try to explain to people that, I mean, your working capital is really, it's your heartbeat. It's the lifeblood of the business. And I always sort of describe it as like a wheel. So basically, that wheel is constantly turning, and what you don't want it to do is stop. Like a heart, you don't want your heart to stop beating. So that working capital cycle, cash conversion cycle, is the fact that whether you're buying stock or you're offering a service. So what you're doing, let's assume we're a service industry business. So you are providing your service, but you might have costs on that service that you've got to pay for. So those costs have got to be paid for, but in turn, you're offering a service, you invoice your customers, you get paid. So that wheel just needs to keep turning and turning and turning. And so it's quite a complicated, I'm not going to go into it now, complicated ratio to work out, but it's just understanding that it's all about that constant generation of cash. And if you just refer that to, it is the lifeblood, the heartbeat of your business. That's what it's all about. So then what we can do, we're obviously monitoring all these key KPIs, and I mean, we mentioned gross and net profit margin. Yeah, turnover is also important. What I say, it's vanity. It is important. Without turnover, you haven't got a business. Without cash, you haven't got a business. Um, and then we need some tools to monitor. So there's whatever you use, whether you use QuickBooks, whether you use Sage, etc. They've all got the ability to show an automatic profit and loss for weekly, monthly, quarterly, whatever you need. But with all this, what is vitally important, and I talked earlier about the fact that how and when you want to monitor your cash requirements, that's entirely up to you. Once again, whether it's weekly, monthly, quarterly, whatever. But it's very important that you constantly review your trading performance. Now, as I said, with Sage and QuickBooks, you can they can produce a monthly P&L for you. So it's a matter of not just thinking, oh yeah, great, okay, well I did 50 grand turnover this month and oh, I've made £5,000, fantastic. You need to be comparing that with what you were budgeting for. So what did you budget for last month? So if you exceeded that, why did you exceed it? If you didn't exceed it, why didn't you exceed it? What was your profit? Was it in line with budget? So it's just a matter of understanding. That's never going to be, look, it's never an exact science. It's never going to be spot on, but at least you need to understand why. That's the most important thing. Why have I exceeded? Why haven't I not achieved my target for that month? So
Yeah.
it's very, very important. It's no good a number of projections that I've seen that then get put in a drawer. Okay, what is the point? And there's nothing wrong with moving your projections either. So if we say, for example, like January the 1st, I've sat down, I've done my projections, fantastic, all looks great. And it gets to March and things might change. You might get a big contract in. So you then need to adjust those projections. Don't just say, oh, okay, they're done for the next 12 months. That's it. Fine. Worth keeping so you can compare where you thought you were going to be to where you've ended up. But you need your cash flow projections should be a moving feast. Because if you're going to grow, your cash is going to change and everything else. Sorry, Tony.
Yeah, I was just going to jump in there as well. Again, this is probably the number one issue when we're working with business owners and with boards of larger companies, smaller companies, is they have no idea on their numbers. You know, the money's coming in and on the face of it, they seem successful, but actually they don't know whether any of their products or where any of those products are bringing in the margins. They don't know what they are. They don't even know if they're making any money. And when we look into it, some of them aren't making money. And I've done that myself when early days in my business, you know, I got my business to £1 million turnover and realised half the stuff I was doing wasn't even making any money. But because I was churning the cash through and I was pulling out cash as well for myself, you know, it felt like it was successful. It felt like it was good, but I didn't know my numbers. And now that's the number one thing that, you know what, any business that we work with, it's about, do you know your numbers? And most importantly, anyone who's working with you in the business or supporting the business, do they know the targets and the key performance indicators that you're managing them with? Do they know them? Can they say, you know, what's the sales pipeline? Can they tell you what client is due to be paying you money? And so many businesses, we ask that around the table and they literally stare at us. They don't know those numbers. So it's so important, especially when things seem like they're going well, is to know why, and to know where the cash is being made, where the profit margins are, what's working, what isn't working, and actually knowing that information so that you can manage it. And then regularly looking at the performance, as Ian said, it like sits in a drawer. We work with some quite large small businesses, and their managers can't tell us any of this information, their accountants and finance teams can't tell us this information. And it's so important that it's looked at on a weekly, if not monthly basis, but certainly not, once every 3 months at a board meeting, or, when we get to the end of the year, we pull everything together for the accountant and we like have no idea about where we are. None of this should ever be a surprise for us, and it's probably one of the biggest issues that we see.
Mm. Mm.
So
yeah, what's interesting is the fact that, in fact, I'll make a note of this and I'll come back to it because I should forget. Okay. Now, with all this, before we sort of talk about this slide, we've talked about financial management, cash flow management, etc., etc. Now, this isn't just talking about businesses that want to grow. This is about any business. It can be about the business which is declining. Okay, so they're in trouble. Why are they in trouble? So perhaps even more should they be on top of what they're doing and what they're not doing. This also applies to a stable, what I would call stable, plodding, dormant business. Mr. Blogs is just happy to, just plod along. But he's also got to be aware of any changes or anything that could happen. All right, and then you've got the business, obviously, that has the ability to grow or is growing. So, this isn't just about scaling up your business and growing. This is about running your business full stop. As I said about the window cleaner or whatever, it doesn't matter what type of business you are, what sector you're in, how big you are, how small you are, whether you're declining, whether you're stable, whether you're growing. All this should be applied. Simple as. Now, the financial risks in scaling. Right, okay, well, over expansion. You're going to need some kind of financial backing. As we said earlier, you've either got to put your hand in your own pocket, or you've got to run off to a bank, a high street bank, or an alternative lender, or you've got to try and find a nice friendly investor. Now, we've talked about the pros and cons of all those. What you've also got to bear in mind, if you are going to borrow money, you've got that what we call debt burden. So can your cash flow support those repayments? Which hopefully, if you do your projections, you'll be able to tell that. Can your profit and loss support the interest costs on that? Then we come down to over trading. Now, I find this quite interesting because when I was in banking, and the number of clients I used to talk to and say, you're over trading. What does that mean? Well, basically what it means is your turnover is going through the roof, and the only way you can finance your cash requirements is to borrow money. Your costs are accelerating, and if you're not careful, it's like pushing a boulder down a hill. It just gets faster and faster and faster. It gets to the point of the speed where you can't actually stop it and it's too late. So over trading is dangerous. It's very cavalier, and you've really got to have the balls to actually do it. Now, I used to say practice what you preach. I used to say to clients, just be careful, you're over trading. What did I end up doing when we were growing? I was over trading. I got to the stage where I'd used just about all my money up, personal savings, and then we went out to the market and started borrowing money. But I was still confident that we could afford to pay that money back. But someone could have looked at it and thought, God, what the hell are you doing? You've gone from 10,000 debt up to 200,000 pounds for loans. You've got this. Okay, your turnover's going through the roof. At that stage, we weren't actually making money because we were growing so fast. But we did. I knew we would turn the corner, and we did turn the corner. So I think it's just very very important that, you know, if you are going to grow, it's nothing wrong with over trading, but control it. You have to control it. Otherwise, your creditors get out of hand, your debt gets out of hand. Before you know it, you're not just generating enough cash to cover your costs. Market volatility. So yeah, be aware of your competition, who's out there. But then again, I always say don't be afraid of your competition. If you get new kids on the block, yeah, fair enough. You might want to know what you're doing, but I think I always take the view is if I'm comfortable with what I'm doing in my business and I'm comfortable with my pricing, I don't really care about the competition, even if they're cheaper than me, because it all comes down to the service and the offering that I'm putting on the table to my clients. So be aware, but don't be too scared of your competition. Um, you've also got external factors. We've got things like interest rates, changes in tax regulations for businesses. So obviously, yeah, I mean, when we went through the last 2 years when interest rates went from 0.5% up to 5%, yeah, 5% still, as far as I'm concerned, if you go back to the late 80s, is still a very low interest base rate, but it can affect a business. If you've borrowed X amount of money at a low interest rate and base rate goes up, yeah, it's going to hit your projections. So, right, the key takeaways from this. I think really what you've got to be doing here, well, without any shadow of doubt, if you're running a business, is you've got to do your cash flow forecast. So your cash flow forecast, as I said, is going to show what cash your business is generating based on whether your turnover is growing, stable, whatever. Because you have to bear in mind, if your turnover is stable, your costs aren't going to be stable with inflation. So that cash flow forecast will give you an idea of your cash requirement. Profit and loss budget. Now, profit and loss budget basically is your turnover and your costs going through your business. Very similar to a cash flow. But what I tend to do with a P&L budget as well is just if you are growing, there's what I call sensitivity analysis. So if you say, right, okay, I'm turning over 200,000 and I'm going to go to 400,000, do it on the basis that you do one on what you want to achieve, but then do it on the basis of 10% less, 10% more. And it will just show you really, it will make a change to your cash requirement, and perhaps keep those costs the same. You might even want to put your costs up 20% to just sensitize those figures. And also, if you're presenting this to a lender or an investor, it's very important you have what you call assumptions. So if you're looking to expand your turnover by 50, 75%, whatever, have some assumptions around that. Why? How are you going to achieve that increased turnover? Why? How have your fixed costs gone up 20%? So just some bullet, it hasn't got to be a 4-page executive summary, just some bullet points on just your thinking, your thought process around those projections. So yeah, smart financial planning, crucial, absolutely crucial. Whatever sort of size of business you are, you have to keep an eye on where you're going and what you want to achieve. Even if you're in a downturn business, you still need that. Choose the right funding. As we said, investor, high street bank or whatever. We know the pros and cons. If you're going to go to an investor route, make sure you can work with that investor. Don't give too much by the way of shares away, and pick the right investor from a personality and understanding your industry as well, or your business. No point in having an investor if he doesn't understand your business.
Yeah, I've got a really great example of that. A client of mine got a really big investor in, and she was in a food business, and it was all about health, and sort of people with dietary intolerances. It was all about, freshly made, and she got investors in, and they put a chairman in to manage the investment, which I get that they do, but the chairman was the ex-CEO of Frankie and Benny's. He did not understand her business. He literally stripped out everything that was good about it, and then they went bust within 2 years because he just took it away from, you know, what the business was all about. So you've got to really be careful to think about, you know, do the people understand your business? Are you getting a match? You know, it's safer to walk away and find someone else than it is to just take something and then find that they put people in that do not understand, you know, what your concept's about. Sorry, Ian, I thought I'd add that in.
No, no, fine. Where was I? Yeah, okay. Do you want to move on?
Yeah.
Okay, so really what you need to be doing is a health check. Now, I can refer to the notes now that I was going to forget to tell you. It's if we go back in the distant past, let's go back 15, 20 years. You were a business owner. You could walk in and see your friendly bank manager in the high street and sit down. Hello, Pam. How are you? How's it all going? Right. You're on first name terms. They know your business. Okay. What would you like to do? Well, I'd like to borrow £20,000. Yeah. Okay. Well, hopefully they say okay. 99 times out of 100 they said okay. That's why we had problems later on. But it's they were there to help you. They were your guiding hand. They knew your business. And you had your accountant. Now, I soon identified about 15 years ago that that gap started to widen. Your accountant was reasonably helpful in those days. Your bank manager was very, very helpful, always give you the time of day. So you had two professionals that you could go to and you felt comfortable. That's gone. Your bank manager now, well, you haven't got a bank manager. Your bank official is working in an office in Birmingham on the phone. You've got no idea what the guy looks like. There's no real personality. There's no relationship there. Okay, that's the way they've decided to go. Your accountant. Very careful what I say here, but some accountants are great. And I've seen businesses where they've really grown and had no help or advice from the accountant whatsoever, unless they've actually asked for it. I think there are some accounting practices out there who need to be a lot more proactive with their client base to help and assist. And as I say, the banks is a different ball game now. So there's a massive gap, and I identified that massive gap really, as I say, 15 years ago with regards to businesses. It's a very lonely life, and you need someone, advisor, consultant, whatever you want to call it, without bringing a co-director on board and costing you money. So it's always very difficult to do it on your own. Very, very difficult. So, I mean, looking at what we've summarised, what we've discussed today, you need to be doing that health check on your business. You need to be reviewing your last 3 years trading performance. You need to be looking at your current trading performance. How's it changed? Look at your margins, your costs, your trends. Look at your debt now from your projections that will show whether, you know, not really from your projections, sorry, but if you're reviewing your current debt, where was I 2 years ago? How's it coming down? Am I going to need more in the future? So you need, like going into the doctor and sitting down there for an hour, and he'll check your blood pressure, he'll check this, he'll check that. You need to make sure that your business is still healthy, still where it was 3 years ago, or if it's improved, why is it improving? It's deteriorated, why is it deteriorating? So you need to be doing that health check. Okay, right now we offer a service at the moment, which is the business health check. Now we are offering normally our financial business health check will go out at £647. We're offering that at the moment for the rest of this month at £447. Now, what that does, we will do a report to you. It'll be a detailed, deep dive observation on your trading performance, just like on the last slide. So we'll look at your past performance over the last 2 or 3 years. We'll look at where you are now. We'll look at your trends and your margins. I call it, obviously you've got to produce the report, but we call it like the 60-minute journey. So we will basically look at that information and digest it and dissect it. Within an hour, we'll have an overview of where you are in your business, and then we will provide you with a report, which will be very detailed. On top of that, as a bonus, we're offering what we call a financial growth action plan. And that's normally priced at 447, but that's been available at the moment at 297. Now, I'll explain the growth plan at the moment, but basically the whole package put together, normally priced at just over £1,000, close to 1,100, is available at 597 as a joint package. Can you go on to the next slide, Tony, please? Right, so what that growth action plan is actually doing. So we'll do your health check for you. So we'll look at the business, past and present, give you a report, but then we'll take it one step further. And this is where the fun begins. And this is what it's all about, really. We'll assist you in the completion of your projections, your P&L budget, your forecasts. We'll do an assessment of the assumptions, how we've arrived at that, and we will question you on that. It's not just a matter of you saying to us, okay, well, I'm turning over 200,000, I'm going to do 400,000 next year. Okay, why? Okay, because we will not put our name to this if we are really comfortable that you've looked at those assumptions and they're realistic. Okay, if you think if we don't agree with them, but that's what you want to do and that's what you feel is right, fine, great, but we will test you on that. We're looking at the operations in-house, your actions, your goals, how you're going to achieve your strategy. And on top of all this, what it will come down to is whether you need any potential finance. And what route will you go for that funding? Once again, will it be in your own pocket? Will it be a lender? Will it be an investor? And obviously with the lending, I have obviously with the business that I'm still a director of, we can have access to put you in touch with them to arrange any funding, hopefully arrange some funding for you. That's where we are. Any questions? Say, put them in the chat now. If it's let's have a verbal chat. Was that helpful? Yeah.
Oh, sorry. Ty, I think you're putting the link in the chat for you to book if you're interested in the health check. Yeah, if you've got any questions, you can unmute and ask or put them in the chat.
Just looking at the chat.
I didn't actually know overtrading was a thing, but
What do you mean? What's the thing?
Overtrading.
Right.
Yeah.
There's nothing wrong with overtrading. You've just got to be very careful. It's like driving a fast car.
Yeah.
You know, as long as you can control it, fine.
Yeah. It's not necessarily been an issue, I think, for me, because in effect I'm selling time, so I can manipulate that a little bit more, if you see what I mean. But I just had a conversation with my brother who's got a removals company, who obviously it's a lot more, it's been a lot more investment heavy in terms of vehicles and staff and everything that just goes with that. And they've been fine up until this month. And like you say, the working capital is dwindled, and so they're sort of up against it at the minute. And I sort of think, yeah, they've probably run a business as a self-employed rather than as a limited company, rather than as and probably gone to speak to the likes of my mum and dad, who, as wonderful as they are, have always been self-employed, but he's a step up from that. It's too big, like you say, it's too big to follow that sort of guidance. So I think I'll be going back to him and sort of suggesting that he seeks some better guidance. He's got, like I say, he's got the accountant on board and things like that. But I think potentially he has overtraded.
Right. I mean, we're quite happy. Look, give him our details, and
Yeah.
we're, have a sort of a one-to-one initially with him and just see
Yeah.
what the issues are, and then if we feel that he needs our help or he thinks we need our help, well, happy to
Yeah.
we wouldn't just go bulldoze straight in and do a health check. Just have a chat first and see what what areas of concern there are. So please,
I will do. I will do. It's one of those where, like you say, I suppose you don't, at the minute, you don't give advice to somebody who needs a hug, do you? It's like, it's one of those moments where he's like, I can't believe I'm in this position, and like, turned over 20k last month and this, that, and the other. But the reality is that he is. So I think once he's got himself back, then he'll have his head back in the game a little bit more and be ready to. Does that make sense?
people are too proud sometimes to ask
Yeah.
other individuals, I need help, because they think sometimes that person doesn't know that business as well as I do. They don't need to know that business as well as you do. It's a matter of it's quite interesting, because I keep sort of talking about my position, but the business I built up, I sold in 2019. I'm still a director, but I'm only in that office probably 5 times a month at the most, but 70, 80 staff. But when you go in, and I call it you're like the helicopter, you're hovering overhead, and it's amazing. I probably see more than I did when I was running it.
Yeah, because you're in it, aren't you?
Because I was in it, and unfortunately, sometimes you see more the negatives than the positives, but that doesn't matter. But it's people are sometimes too proud to reach out to someone, and but please feel free.
I will. Thank you.
Yeah.
Pam just said in the chat, and it's so true, is like some people don't know the questions to ask either, and they don't really realise that actually they've got an issue.
No, don't.
Absolutely. Well, thank you so much for today. If you want to drop in the chat, what have you learned from today? Anything that you're going to do as a result, let us know. And the links in the chat if you want to book the health check. And other than that,
we send the slides out, don't we, Tony?
Sorry?
The slides go out, don't they?
Yes, slides
are going out
to you anyway, so I will send them out to you. But thank you very much for joining us this week, and we look forward to seeing you next week. Next week is all about productivity.
Right. Okay, well, have a great day, have a great rest of the week, and see you next Thursday.
Thank you.
Or if not before. Okay.
Thanks very much.
Right. Bye.
Take care. See you
Bye.
later.